Hi guys, welcome to today's video. People always ask what companies do I invest in, how do I find great companies, but today I'll tell you how I do that. Before we start, toss a quick like on the video and read this quick disclaimer. Alright, let's get into the video. So to invest successfully, you need to know three things. First, you need to know how to identify these great companies. Two, you need to know when to enter these great companies or when to start investing in them. And three, you need to know when to sell your investment or when to take profits and size out your position from your investment. To find a great company to invest in, there are four criteria. The first would be that the company is a big player in the industry or is the market leader. The second criteria is that this company has a strong competitive advantage or a very big economic moat. This means that when they have strong competitive advantage, they are able to have pricing power and can pass on increased costs to their consumers. So have you ever wondered why your iPhone increases so much in price year over year? The third criteria would be that these companies have consistent and stable growth in their net income, their revenue, and they have consistent growth as well in their operating cash flow and free cash flow. The fourth criteria would be that the company has much more cash than debt. So their debt is low and they have high amounts of cash. This is important because if all of their creditors suddenly demand to be repaid, the company has enough cash to pay off all these debts, so they don't end up like Evergrande in China. To explain my methodology, I'll use an example. So the stock I'll be using today is Taiwan Semiconductor Manufacturing Company, ticker TSM, listed on the New York Stock Exchange. So TSM is a big market player and an industry leader, as it is one of the global chip manufacturing leaders and is the 10th largest company in the world by market cap. In the chip manufacturing industry, TSM has a global market share of 52 to 59% of the whole market. For the high-end chips, which is less than 10 nanometers, Taiwan Semiconductor Manufacturing Company actually has over 90% of the global market share. The smaller the nanometer of the chips, the more powerful they are. For example, all recent models of the iPhone are fitted with the 5 nanometer chip. Other customers of Taiwan Semiconductor is also Apple, Nvidia and AMD. Moving on to the second criteria to see if Taiwan Semiconductor has a sustainable competitive advantage, and they do. And this sustainable competitive advantage comes from their huge market share and specialization in producing these high nanometer chips. So their closest competitor is actually Samsung, who only has 15 to 18% of market share. And furthermore, Samsung produces their chips for their own devices, while TSM produces their chips for their other customers as mentioned earlier, like Apple, Nvidia and AMD. Furthermore, the barriers to entry into this industry is very high. To construct a single chip manufacturing foundry, the estimated cost is about $1 to $4 billion. So that is very expensive and very few companies are able to afford that sort of initial investment to compete with Taiwan Semiconductor. Now let's move on to criteria 3 and criteria 4 for TSM, which is their fundamentals. So when we take a look at their fundamentals, we can see that their revenue and net income are growing consistently. Their operating cash flow and free cash flow have also been growing consistently over the long run. Furthermore, the company has a huge amount of cash and lower amounts of debt. So their fundamentals look very strong. Now that we've established that TSM is a very good company, let's take a look at their valuation. So for their free cash flow projection, I've used growth rates of 15%, 12% and 8% for years 1 to 5, 6 to 10 and 11 to 20 respectively. And combining this with a discount rate of about 6%, I've generated an intrinsic share value of about $143. And this is about 18% discount from their current market price. So TSM is very undervalued and it is a good stock to buy. Moving on to the technical analysis and looking at TSM's chart, we can see that TSM is currently in a stage 3 distribution phase after their stage 2 uptrend. So the stock price has been ranging for the past 9 months, and if you like to enter TSM, you could enter when the stock price breaks out of its current resistance level of about $125. For trading opportunities, you can trade within the range of TSM from the lows of the range to the highs of the range, or vice versa. Finally, the last thing you need to know is to know when to sell your investment in TSM. So I would sell my position in TSM if the fundamentals deteriorate. That's first. Secondly, I will also sell or size out my position slowly and take profits if TSM hits $143, which is the intrinsic share value, and becomes overvalued. And that's a complete run through of how I find great companies to invest in. Hope you found it insightful and helpful. For those of you who like to try out the intrinsic value calculator that I showed in this video, smash the like button and drop your email in the comments down below and I'll send it to you. Please like, share and subscribe, and as always, may the markets be in your favour, and I'll catch you in the next one.